traders at UBA anticipate a slight increase in rates as market liquidity is likely to decrease owing to this week's CRR debit. Meanwhile, market watchers are awaiting the release of CBN's bi-weekly retail SMIS auction results. Chuka Nwachukwu, head of ALM and balance sheet management at UBA, joins me now for this week's summary. Chuka, thank you so much for taking the time out to join us today. Let's just start with a summary of today's trading action across the various market segments.
Okay, thank you, Esther. The market has been, the liquidity in the market has persisted this week. We've seen rate hover around 11.5%. But like you said, we expect that towards the end of next week, the liquidity will drop. We'll see some of this liquidity leave the system, and so we probably will see rate around 15.5. That has also affected the treasury bill market. We've seen that the 1 year bill that came out 10.17 and then dropped about 250 basis points a day after the auction, has not moved upward, had not moved downward as expected. We see it around, in fact, the yield has elevated to about 10.5. And so on the bond market as well, we've seen a bit of sell-off, especially on the longer end of the curve. And that is because market watchers expect that with the illiquidity expected to be tight in the coming days and weeks, yield will elevate.
Now, back to that, the CRR debit, the cash reserve ratio. As you know, banks are required to keep, I think it's 32.5% of their cash with the CBN. But we know that this liquidity squeeze among the banks has persisted in the last couple of weeks, and we've seen some have been more frequent at the CBN's lending window, this to meet their daily cash demand. I'm just wanting to get your sense of what the outlook is. Is this going to persist? Can we tie that to, because looking at what we've been hearing from the news, deposits from Nigerians have not been flowing like before, etc. Just wanting to get your perspective on how this is playing out.
On the CRR, CRR is a weekly thing. Is a tool whereby CBN uses to mop up excess liquidity in the system, and so it's a weekly thing, and it will obviously continue until there's a policy change on that. Going into your other question as regard the deposit shrinking, we just came back. We're just coming in from the era where the cash, the redesign made a lot of depositors to put their excess cash in the system, and so that obviously has dried up, and then people are a bit skeptical about depositing their cash in the system because of the issue that characterized that policy. So that also has affected the liquidity. The only avenue in which the system liquidity has been surviving on is the FAC, as well as the coupon and then OMO maturity and NTB maturity. So without all those inflows coming in, it's going to be pretty tight.
All right, let's talk about your outlook for the market in the coming week. Are we going to see the liquidity crunch continue, or will there be some ease and perhaps maturities come in, etc.?
Yeah, the liquidity is going to be tight. We see this liquidity constraint starting from next week. There isn't any major inflow as regard a coupon payment, and then the maturities are always in and out. So obviously we can't count that as an inflow, because whatever is matured is also offered in the market. So this liquidity will continue to dictate the pace in terms of trading, and within the next throughout this month, we don't really see any major liquidity coming in other than FAC.